This brings us to the next item on our agenda, which is a presentation from Appraiser Director Alejandro Benitez explaining the assessment process. I've already seen it. It's informative and succinctly explains how properties in the county are assessed.
Morning, everyone. As the chairman said, I'm Alejandro Benitez, Alex Benitez, for those that struggle with Alejandro potentially. So I'm the Chief Appraiser, Evaluation Director for McHenry County. I've been here for about 12 years was a real estate appraiser prior, and so it lended itself very well to a transition into assessments, all right? So what we have here is an overview of the what, why, and how assessments are intended to work in the property tax system, all right? I say intended because many people, including assessors, board members, constituents, attorneys, sometimes get so ultra-focused on the individual aspects of assessments that we lose focus on the purpose and design of the whole overall system, all right? I've talked to tax attorneys and tax reps that have been doing this for years, and they still make my skin crawl with some of the things that they say because it's just so inaccurate, all right? And if they think that, what does the average person think, all right? So we're here today, and we're going to talk about, I'm going to give you 12 years. I'm going to give you a property tax multivitamin, all right? I'm going to pack 12 years of what we've got here into this 20-minute presentation of the what and why, and we'll go from there, all right? So, in the property tax system, we have assessments to deal with, right? So we have that aspect. Assessments are tied into market values, all right? Equalization is also something I'm going to discuss and explain in here because there's a lot of misconceptions. In order to kind of get everything to coalesce, I'm going to give you a whole bunch of calculations so you understand the math behind everything, because that's a common misconception, that assessments is very subjective, all right? But it's not, it's very objective. There's a lot of math and calculations that go into it, all right? And in those calculations, we'll touch on the CPI and PTEL, all right? Because that's all important moving forward, all right? Now, every angry taxpayer that's coming to our office, I always try to break it down into a format that they easily understand, and this is what I've had the most success with, all right? And it's the dinner example, all right? There are 5 of us at dinner. All right, we all order the same special and a drink. The total including tip, because people try to always throw in the tip afterwards, no, the total including tip is $100. How much do we each pay? Anyone brave enough to answer? 20 bucks, right? Somebody said 20 bucks, right? How'd you do that so fast? All right, I'll answer for you. Most of you probably just said divide by 5, right? Now, instinctively, that is a good answer, all right? But I'm going to tell you that there's a better answer. There's a better way to explain what you did, all right? Because you skipped a step. You did something so instinctively that you skipped it. What if I said we did 100 times 1/5 equal 20, all right? The step that you all instinctively skipped was that you all assessed every meal at a value of 1. Why? Because we're all having the same meal, right? And since there's 5, that's 1/5. 1/5 of 100, $20, all right? So what we deal in assessments is working with that fraction there, all right? So using this dinner example, we're not at a restaurant. We're government bodies. We levy here, right? So that $100 becomes the levy. We just talked about how that 1 is an assessment, that 5 is the total of the assessments, and then the $20 is not a restaurant bill, but it's the tax bill, all right? This should look familiar to everyone, but some of you are probably thinking, no, that's not right. It looks right, but it's not right. So let me rearrange this for you. What if I move that total assessment underneath the levy? Now, many of you are going to say, okay, that's a little better. You're getting close, Alex. Bam. That levy divided by that total assessment is the rate. All right? So those 3 things, I'm going to go back, those 3 aspects are the core numbers of the props bill. So heavy amount dynamic, it changes year to year. The total assessments also change year to year, and also assessments change year to year. So it's a very dynamic system. Things change year to year. And that's one key difference when people try to compare and understand property taxes, because they all compare it to the federal and state taxes that we're so used and ingrained on understanding, right? That's one of the biggest difference. But there's one other difference, and this is the biggest one in my opinion, all right? The biggest difference, can anyone guess what I might think is the biggest difference? All right? I'm going to go ahead and just jump ahead. All right, in my opinion, the biggest difference that is in income tax, the government checks your work. With property tax, the taxpayer checks our work. It's reversed, all right? And if the taxpayer and the layperson is going to be checking what we as a government do, we need to give them the tools and understanding to really understand how they check what we do, right? So we need to tell them that their assessment is tied to the market value, because every homeowner should have a basic concept of what their house is worth, right? What's in their house. So we tell them that as long as you have that number, 33 1/3% should be a gauge for your assessment, all right? We also break down the land and the building. We break down the farmland and farm buildings so that we itemize those things, all right? We publish those changes and those equalization factors for transparency, all right? And as in a further step, McHenry County sends those notices out to everyone, all right? So that people can then get that piece of paper and say, okay, they're saying my house is worth $250. I can easily sell it for $300 right now. I'm good, all right? So moving forward, I'm going to be breaking down a lot of what we do and talk about using these three components, all right? In assessments, obviously, we have two of the three aspects of the property tax bill. So that's why everyone associates property taxes to assessments, because we control 2/3 of that equation. All right? We live in this box. We don't care what happens with the levy amount. A lot of people don't realize that. We have no interaction with that. We work in our box and we stay in our box. All right? And get used to this equation, because like I said a moment ago, you're going to be seeing this a lot. All right? So why do we equalize? All right? And what is the relative effect of equalization? Everyone gets their assessment notice every year and they see an increase of 4%, 5%, 6%, all right? Every year, right? A lot of people default to saying, oh, we need more money, they need more money, they're raising my assessment. It's not really the case. All right, so I'm going to use this equation in order to kind of explain what's going on, and again, the relative effect. As I go through these math problems, understand I'm breaking it down to the most basic part. There's another section where I get into some more of the nuance. So just bear with me if you want to jump up and say, hey, that's not right. Just do me a favor and just hold on a second, all right? So 100 times 1/5 equals 20, all right? That's for this standard meal that we just talked about, right? All right. But how many of us have friends that like to get an extra side or get a drink, or somebody that's going on a diet and they want to get a salad, right? Does this numbering system of 1/5 really allow us to play with the numbers in order to kind of accurately assess what everyone is supposed to be paying? No. So we need a more robust number down there, all right? So what if I say I'm going to increase that 5 to a 15? All right? I'll just pick 15, a factor of 3. What should that top number be? A lot of you are thinking it should be 3, right? So I'm going to adjust that. For that meal, now we're going to be talking about 3/15. Is anyone here calling me up and saying, I just raised their assessment 200% in order to get more money? No. Are you encouraging anyone to call us because that's what they just said, what is going on? No. Why? Because that 3/15 is still technically 1/5. We haven't changed anything, all right? Why do we do that, all right? I was just very random and picked 15. I could have picked 20. I could have picked 25. We cannot be that random in assessments, okay? What we have to do is tie that to something. And since we are already giving the people the opportunity to appeal based on market, so we tie it into the market. All right? So, again, that lower number has to come from somewhere. And here's where it comes from, all right? This is a trend since 91 all the way to 21 of what market values have been in McHenry County and throughout of many areas. Nobody should really object to this, all right? It was all level through the 90s. It increased near 2005, 2008, came crashing down, and we bottomed out right around in 12, and now we've been in an upward trend. Everyone agrees with that. That's the market, right? Since we deal with 1/3 in assessments, this is the 1/3 value. So both of these represent market value, okay? Now in assessments, we deal with assessment ratios, which means that we use the prior 3 years in order to come up with values, right? So assessments, that lower number has to lag behind what's actually happening because we use the prior 3 years in order to come up with the next data point and data point. That levels things out, and flattens them, and it lags, right? So that's what's happening with that lower number in the total assessed values, all right? So now I'm going to bring everyone's attention to this section here because that's where we're currently at, all right? So we've established that the top is the market values, the lower is the assessed values, all right? We just finished our work for 2021, all right? We know where we're at for 2021. We have sales from 19, 20, and 21. That's what we're going to be using. That's the source of our sales ratios. Now, another level of lag is that we use a current sale and the prior year's assessment. So there's another level of lag. So we actually use 18, 19, and 20 assessments. That builds a level, softer line. All right? Now, with those 3 items, we're able to know and predict and calculate where we're going to need to be for 2022. All right? And how do we get from 21 to 22? Through equalization. All right? That's normally a number plus or minus 1. All right? You cannot check our work if we don't equalize. If we lose this correlation by not equalizing, you lose the ability to check what we're doing. It exposes errors or it exposes different things. That's why we do it. We don't do it for any other reason. All right, so let's keep that in mind. All right, so my definition that I use, because I've done the analysis on a lot of stuff. Equalization is a tool used to maintain the correlation between assessed value and changing markets so that you can annually check our work while also maintaining a relatively consistent tax bill over the same 4-year cycle or the quadrennial. That is the purpose of equalization, all right? Equalization is calculated and verified with no subjectivity, all right? The final equalized value that is published and set in the notices is now an individual's opportunity to check what we do, all right? So that's equalization, and so that's the thing that I want to make sure is addressed.
That's mandated by the Department of Revenue too, so it isn't just, it's not his idea, although it looks like in that definition is correct, but that's dictated by the Department of Revenue. They do that for every county and township in the state. So they're the officials saying they give us the numbers.
Okay. So we're going to be talking a little bit about extension and the tax bill here, all right, because it all is intermingled, all right? Let's just remember that, again, that calculation that we do, it's done for everyone here. And this is only just my tax bill, but everyone has many of these. There's overlapping districts. It gets much more complicated. Anyone from the clerk's office, I don't want to minimize what you do. There are thousands upon thousands of these calculations that are done, which is where the complexity starts to really come in and come out, all right? So let's understand the math year to year, all right? So levy amount, assessment, total assessment, tax bill, all right? So let's say we're McHenry County, and this year we're going to say, hey, we're going to hold the levy flat, so it's equal. Let's say assessments go up 8%. If your individual assessment, if your total assessment goes up 8%, your individual one goes up 8%, right? Well, what does that do to your tax bill? It should be the same or about the same as last year, right? Okay, but what happens is that some houses, some properties can't absorb individually an 8%, so they appeal, all right? So they get a reduction. So what really happens is that this lower number here gets decreased, And what happens to the math when the lower number is lower than the upper number? It creates a number greater than 1, right? And so a tax bill could potentially increase for that discrepancy, okay? So let's talk about two neighbors, all right? I'm going to start using some more standard numbers here, all right? I'll tell you when they correlate to some real numbers. But this is more consistent to what we've seen over the last couple of years. A 2% levy increase for neighbor 1, all right? His assessment goes up 8% this year, all right? All right, we just talked about how there's assessment loss, creating a slight reduction in total assessment. All right, so his tax bill could potentially go up 2%, 2.01%. What's the source of that discrepancy? Well, you have 2% for the levy change, and then the balance, that 1/100th of a percent, is due to the assessment decrease or change, okay? So he got his assessment notice and says, hey, they're saying I'm worth $108,000. I can easily sell my house for $120,000. I'm good. I'm not going to do anything, right? It's not the case for neighbor 2, his neighbor. You have the 2% levy increase, all right? He gets his assessment notice, and his house is now worth 8% more than it was last year. Well, he just had an appraisal, or he just bought his house, so he has some hard data that says, no, my house is not worth $108,000. It's really worth $103,000. All right, that's a 3% increase over last year where we had them. All right, you've established how this amount down here decreases when there's loss. All right, well, he contributed to some of that loss because we're now assessing them less than where we had them originally. All right, what can he expect in his tax bill? He can expect a decrease from the prior year of about 2.7%. So everyone see how the math is working? All right. Even though everything went up, his bill still went down. All right? That discrepancy, that change there in the math is what creates that. All right? So now these are something a little bit more real. We were supposed to have this presentation, I think, last month. So this was the numbers that we kind of had in prepping everyone for last year's bills, or this year's bills. All right? So the levy amount increase for the current bills that are being paid was approximately, the maximum they could ask for was 1.4%, right? Last year, we had an average assessment increase of about 4.5%, all right? Since the market was so hot and so crazy, we had very few appeals, right? People couldn't appeal, all right, because they were selling houses for way more than we had them assessed because we couldn't put them there, all right? So we had very low numbers. So let's just say, 4.5%, minor, all right? So these tax bills that went out could have seen about a 1.4% increase, all right? And based on the volume of calls that we've gotten and that I've seen, it seemed like everything was pretty normal and it was a standard year, all right? So let's talk about this trick question. And I am telling you in advance, this is a trick question, all right? Let's say you, as a county board, had the ability to tell Bob, give us a break this year. We're having an assessment holiday. And Bob says, okay. 0 assessment increase. Yay, right? How many of you are blowing off fireworks, right? You're all right? All right. Well, guess what happens to that lower number? There's 0% increase there too. But next year, guess what? Because of the CPI, where it's at in PTEL, CPI this year is over 7%. The taxing bodies, the districts, are going to be allowed to ask for 5% for the CPI or 5%, whichever one is lower. Since it's 7, let's just assume that for argument's sake that everyone's going to ask for 5%, just so we kind of prep for that. We know that there's a lot of responsible people out there that aren't, but let's just say that it's 5, all right? What happens to the tax bill next year? 5% increase. Why? And that's despite your assessment holiday. All right? But what happens in this scenario? We send out assessment notices with a 0% increase. Are we going to get any appeals? No. Right? Are we going to be able to find any errors in assessments or changes, tweaks? No. Right? So, everyone here everyone on your tax bill is allowed to potentially increase to that 5%. And again, I'm not sure who's going to take that. I know that there's discussion is internally as to what that's going to be for us. So let's talk about what's really going to be happening now, because that assessment holiday is fiction. We can't do that, all right? So we just talked about the 5% levy increase, right? Our assessments, because the market's been so high, on average, are going to be going up about 8.6%. All right. I think the lowest one is 4.2. The highest one is almost 11. All right. So some townships are going to be going up somewhere in the middle, 6%, 7%, 8%. So you're going to be getting calls on what's going on and why we're asking for so much more money. All right. It's in order to keep that correlation. We anticipate that if everything was perfect and hunky-dory, if this were to happen and there would be no assessment loss, we would expect an increase of 5%, like we've said. But here's that last layer of complexity that I was talking about a moment ago. All right? This lower number is a combination of multiple townships. Let's assume we're in Woodstock right now. All right? Well, Woodstock is made up of Seneca Township, Dorr Township, that one I believe might be Greenwood, I'm not sure, and Heartland. All right? So this lower number has to get calculated and then weighted. And based on where you're at, this could be about 7%. So it's a weighted average that you can anticipate seeing. So for argument's sake, I'm just going to say it's 7.5%, somewhere in the middle. All right? Well, what's going to happen to the tax bill? That's going to go up 6.57%. All right? So a portion of that is because of the 5%, and the balance here is because of this discrepancy. All right? So I tell people to pay attention to this ratio to understand what the assessments are actually going to be responsible for. And then I also let them know where they're at and that potentially it could be 5%. So this is what's going on. All right? So how can you help? Obviously, it's always great if people have their exemptions. We still have some seniors out there that aren't even aware that there's a senior exemption and a senior freeze. Reach out to them, make sure that if they make less than $65,000, they're put on those and they apply for those. Those help year over year. We can increase that 200%. And if they're on the freeze, they get to say, that's on you guys. All right? I'm going to be okay. But they need to get on that freeze when that happens. All right? Encourage people to check their assessments and their exemptions, and then please understand that everything that we do is calculated, all right? There's very minimal subjectivity in the overall process, all right? And then I'll leave you with this, because the next step in the assessment cycle for us is those notices are going to be going out. So if you're in a district that has a higher factor, please be prepared to answer them, and hopefully you can use some of what we talked about here to kind of put them at ease, put yourself at ease, or at least prepare some of them for what could potentially come, all right, without objection. Any questions?
Let's take